Hey guys, welcome to ER Review, where we take a look at some of the biggest earnings from the past week and analyze how the stocks reacted. I'm your host Steve, and I'm joined again by my co-host Patrick. We've got a lot to cover today, so Patrick, take it away.
Yeah, we just wanted to leave a quick disclaimer that everything we do share in this video is our opinion. It should not be taken as financial advice. If you have any questions before making an investment, you should always consult a financial advisor. All right, Steve, like you said, it was a very busy week, so I think we should start, just jump right into it with probably the biggest earnings, or at least the biggest company that reported earnings last week, and that's going to be Google. Steve, anything stick out to you in Google's earnings report this week?
Yeah, so Google had a few big things. One, one they did report their earnings per share. Actually came in well above what was expected. They actually reported $15.35 per share as opposed to the expected $12.53. So that's quite they pretty much crushed their earnings in that regard.
Mm-hmm.
The revenue was actually a little bit down though. They missed it by about $1 billion. They were expected to have 46.9 billion and they came in just over 46 billion. So that was that was pretty neutral there. One of the big bombshells, though, if you wanna call it that, was that we found out how much YouTube um, is making for Google. YouTube ads added an extra $15 billion of revenue last year alone, and in the fourth quarter, they were they the revenue was $4.7 billion. So huge revenue coming in from YouTube for Google. This doesn't even include YouTube TV subscriptions. So
Mm-hmm.
that's just huge for the company. Up about 31% from last year, YouTube
Oh
revenues.
wow.
Their cloud business also generated $8.9 billion, which was a 53% increase from a year ago. So just crushing it. And they're still expected to grow their cloud business. The long-term chart looks great. They had a little bit of an up and down week, but Google looks like a phenomenal company moving forward as expected. Got any thoughts on that?
Yeah, I mean, the overall the earnings looked pretty fantastic in my opinion. I mean, the stock did take a nice pullback as soon as they reported, mostly just due to their revenue miss. I mean, the earnings per share was spectacular. The earnings miss was kind of a surprise. I would definitely
Hmm.
like to see that continue to grow and keep going up. I do like that they're sharing more information, kind of breaking down their revenue a little bit more with the YouTube and everything like that. But I mean, even since they fell, the pullback after earnings, they've pretty much retraced all of that since since I don't know their slight pullback. So I think overall people overreacted a little bit on that revenue miss, and that's pretty evident by the going back to original pricing. But I
Hmm.
think pretty solid quarter, pretty solid year for Google. One company that did not make a comeback after reporting earnings and taking a nice fall, they definitely burned me a little bit, and that was Snapchat. They fell
Hmm.
about 14% after their reported earnings. They're up around $19. I had some option plays on them. I didn't really want to hold them over earnings, but I did, unfortunately. But the main thing that brought them down was a revenue miss of about $2 million. They reported 561 million. People were expecting 563. Um, I mean, it was up 44% from last year. So I mean, come on, yeah, I mean, cut them some slack. But um,
Hmm.
you know, the market just didn't. I mean, they did beat their EPS projections of 1 cent. They actually reported 3 cents, so that was a nice beat right there. And they grew their daily active users by 8 million from the third quarter to the fourth quarter, giving them a total of 218 million daily active users, and they're only expected to have 215 million. Um,
Hmm.
I mean, with a slight miss with the revenue. I guess the pullback might have been expected. They've had a very choppy year in terms of stock price, bouncing all the way from $6.70 or so all the way up to almost $20. So they've
Hmm.
kind of been all over the place. So I don't know, maybe to be expected if things weren't 100% perfect. Any opinion on Snap last week and how they reported?
I mean, I think, missing the earnings, they fell that 14% you were saying, which was a big hit. But overall, you talk about the range that they traded over. I remember, I think it was a year, maybe even 2 years ago, I actually owned Snapchat, and I owned it when it was in the single digits.
Mm-hmm.
So, I mean, the fact that the stock is even double digits to begin with now, I think that tells you a lot about the track that Snapchat is on. Um, yeah, they missed earnings. They fell 14%, but overall, it sounds like they are growing. It is a stock to keep in your line of sight. Just something to check on. I'm not totally in or out of it right now in terms of if I were willing to invest or not, but definitely definitely year over year they're making some improvements. It sounds like.
Yeah.
Um, yeah, moving on to another big earnings was Disney, and I think a lot of people had some high expectations for Disney because they unveiled Disney Plus. All the streaming, your Disney shows, they show all the Marvel movies on there now. Um, there really wasn't that much movement this week. They had some nice earnings though. Top and bottom lines, they beat both of those. So their revenue and their net income. They had an earnings per share, or they reported earnings per share of $1.53 compared to the $1.44 that was expected, so they beat that. They beat their revenues. They reported $20.8 billion as opposed to 20.79. It was actually $20.86 billion compared to 20.79 billion expected. Um, and yeah, Disney Plus has right now of this recording has 26.5 million subscribers. 10 million of those alone signed up in November. So about 20% of those subscribers are on a free trial right now, but about 50% have already signed up for longer term deals of 1 or 3 year plans. So I think their streaming service is definitely getting some attention like they wanted. The other thing to keep in mind with Disney is not only the streaming service, but their theme parks. And so the coronavirus outbreak has really been affecting their Chinese and Hong Kong parks. So that could be something that affects that's something to keep in mind. It could affect their earnings down the road. There's also they've had the protests in Hong Kong, which has really hurt them this quarter as well. Um, or not this quarter, but moving forward, they expect that to hurt them. So, not they reported some good earnings, not too much movement. It seems like they have some headwinds coming down the pipeline, but yeah. What else do you have to add? Anything else?
Yeah, I mean, you did see a slight pullback this previous week, or maybe even the week before, due to the
Hmm.
coronavirus. But based on the earnings and stuff, it seemed like the stock was able to rally back into its previous price range. Each time it has a nice little jump, I feel like it gets a little stagnant. But if they can continue to bring out numbers like this and their Disney Plus continues to grow better than they had expected, I think this is a nice little buy here. Especially, their PE sits at about 26 right now. So I think, you know, not what you think of in terms of a growth company, but I think they definitely have some growth ahead of them with a lot of the new
Hmm.
stuff they're rolling out. And if the coronavirus problem doesn't wreak too much havoc on their income, but we're still going to have to kind of see how that plays out. Um,
Hmm.
but I mean, one stock that skyrocketed, I guess you can say, based on their earnings reports. was Twitter this week. They had some nice numbers. They had a very nice bounce after reporting. I think going from about $33.50 all the way up to 39, almost 39.50. They reported their best quarterly user growth ever, I believe, with their daily active users up 21%. So that was a really nice number as they kind of try and restructure some things. Um, as I mentioned, they rallied almost 15%, had a very nice jump afterwards. Their revenue, came in as a beat, just over $1 billion, and they're expected around 996 million. So, getting over that $1 billion mark, I think that was a pretty nice thing for shareholders to see. Um, and like I said, that they had their daily active users were up to 152 million, and they're only expected to have in the, around 147 million. So that was nice to see. They did miss on earnings per share. They reported 25 cents. About 29 was expected. But based on all the other earnings reports we've been seeing recently, it looks like revenue is the main factor here when people are determining what's good and what's not right now in the market. Coming up this year, they're going to try and build some new data centers, and they also want to increase their employees by about 20%. I think they're looking to add about 900 new employees. Um, so, I mean, the stock tanked back last year. They had a lot of issues with ad targeting, data measurements to share with their partners and people who want to put ads on their platform. But, based on their earnings call this previous week, it sounds like those issues kind of peaked. They still might bleed over a little bit this year, but it sounds like they expect to have a lot of those completely solved by the end of this year. And like I said, they want to build this new data center that's going to help them with their data analysis and ad targeting. They kind of want to have that rebuilt by the middle of this year. So definitely a lot of steps in the right direction with this stock. Seems like a good place to buy in my opinion. What do you think, Steve?
Yeah, huge bounce back for them. Like you were saying, they faced a ton of headwinds last year. I think one thing that they're doing that in the long term will definitely benefit them is they're staying out of the political arena, not allowing those political ads. Um, yeah, I mean, I'm really not too familiar with Twitter, but I think this is a great sign for them. Honestly, I wouldn't be able to give like my best opinion right now just because I really haven't looked at them too much, but it sounds like they're at least making a comeback, which, hey, that's always a good thing when you're able to jump based off good earnings. So, something to keep an eye on moving forward. Um, Next, we have Uber. Uber reported their earnings this week as well, um, and they had a little bit of an uptick after reporting. So they're moving in the right direction. They're starting to move in the right direction now as well. They had their IPO come out this past year, and it was a little underwhelming. So they're starting to move in the right direction. They moved their profit forecast forward to the fourth quarter this year. Initially, it was supposed to be for the fourth quarter of next year, so um, that's some nice progress there. They had some major layoffs back in October. Um, this had to do with marketing, recruiting, Uber Eats, and other groups around Uber, and that led to hundreds of employees being laid off. They could have helped them in the long term, or that could help them in the long term in terms of cutting costs. But in terms of their earnings, they did report a loss. They reported 64 cents per share as opposed to the 68 cents that was expected. But they came in a little above their expected revenue. They reported $4.07 billion as opposed to the expected $4.06 billion. So you got a little bit of a beat there. They're still spending a ton of money on referrals and incentives for drivers and food delivery. Um, they're really not considering self-driving tech for the short term of their business model. I know long term they're looking more towards it, but for the short term, they're not. It's just not ready yet. Um, Another thing that they report is they also think that Uber Eats has some room to grow. So they're planning to keep it right now. We'll see how the company grows. Um, they're starting to move in the right direction. I don't know. What else do you have to add there, Patrick?
Yeah, I mean, it definitely looks like they're moving in the right direction. I don't know. It seems like for I don't know a new public company, they still got a lot going on. They got the
Hmm.
the food delivery. They got just your basic Uber. I know they do some stuff with like freight and truck drivers and stuff like that. It just seems like they got a lot of moving parts right now. So I think I would still give it a little bit more time before I get involved personally with the stock. Um,
Hmm.
I don't know. I think their business plan still seems a little shaky to me. Um,
Hmm.
but I think this previous earnings was a step in the right direction. I think that was pretty evident by the market movement that we saw. Um,
Hmm.
Another company that had some nice movement, nice earnings at least this week was Chipotle. I know they did take a little bit of dive after reporting, down about $20 or so, but they are a pretty expensive stock. Um,
Hmm.
but I mean, another company that I think is moving in the right direction. I mean, they've been growing a lot in the previous year or so, but um, about a fifth of their sales in this last quarter came from digital orders, and I mean, it's hard to deny that digital is the way things are moving. So that was nice to see.
Absolutely.
But I mean, the digital sales not only were a fifth of their orders, but it also grew overall as 78% in the quarter. So huge growth there. Their earnings per share, they had a nice beat, $2.86 compared to the 2.75 expected. Um, I think the pullback we saw was again because of revenue. I mean, they just met expectations at 1.4 billion, um,
Hmm.
almost an 18% increase from last year's fourth quarter. So, I still nice growth there. Um, and they going on with the growth, they saw same store sales grow about 13%, as opposed to the 9.5% that the market was expecting. Um, Income of about 72.4 million was up from last year's fourth quarter of 32 million. So, I mean, doubled the income and then some from last year.
Hmm.
One thing that they contribute to their good quarter was the carne asada that they added to the menu. They did extend that into this quarter as well. They're looking to make it a permanent item actually, as long as they can find a high quality supplier. Something that a lot of investors like about Chipotle is, they're always looking to have high quality ingredients. So look for that type of, some sort of announcement on that. And they also plan to replace their current queso with a new one, possibly add some new menu items down the line as well.
Hmm.
But I mean, going along with all this growth, they do want to open up about 150, 165 new locations and start adding drive-throughs for online order pickup. Kind of boost that digital order sale. I know they have rolled out some so far with the drive-through, but we'll see how that develops over time. And like I said, I mean, despite the all the positivity that I see, the stock still fell a little bit. How do you feel about Chipotle here?
Yeah, I mean, I'm a big fan of Chipotle. First of all, I love the food, but second of all, I do really like the stock. I am a little surprised that it fell after reporting, such pretty solid earnings, I think, overall for the quarter. I mean, like you were saying, they've been growing pretty well this past year. I think their chart looks great. I think the company's great. And yeah, with the online orders and the drive-throughs coming up, or them trying to install drive-throughs, I think that has the great potential to bring in more foot traffic, which would in turn boost revenue even more. So I think Chipotle's in a good spot right now. I wouldn't read too much into that pullback.
Yeah. All right, Steve. Well, so we just went over those six stocks. If there was one you had to buy and one you had to avoid, uh, which ones would those be? Right here.
Ooh. Well, right now, I think I would avoid Snapchat. Just kind of let things settle down. They might, I think they're moving in the right direction, but right now, I would avoid it. Kind of let things settle down. I really like Google. I think, the growth that they showed this quarter, just absolutely crushing earnings. Chart looks great long term. Um, I think Google's the way to go right now.
Yeah, I think I'd have to agree with you on the snap. I think they're still a little bit unpredictable, and
Hmm.
I don't know. I just feel like that little section of the market is a little overcrowded. There's a lot going on. You always got people coming in like TikTok. There is,
Hmm.
I think it was Vine a couple of years ago. So, I mean, you really never know what's going to go on with that sector. So, uh, I think Snap I would try and avoid. But I think I like
Hmm.
Chipotle here. I mean, the growth has been phenomenal. The stock's been on fire. It looks like they're going to continue to try and grow, improve, expand. So I really like that. The revenue I'd like to see them get that up and maybe look for some places to cut costs without, you know, taking out their high quality expectations.
Hmm.
But yeah, I think overall pretty interesting earnings week. We do have some interesting ones coming up next week that I think we'll want to take a look at. Uber's sister company, Lyft, kind of more pure play. We'll take a look at them, and then some big
Hmm.
tech names of Roku and Nvidia next week.
Hmm.
I know we've talked a little about Under Armour in the past. They'll report earnings next week, so it'd be nice to take a look at them. And then also Alibaba, with everything going on in China, kind of interesting to see how, what they're expecting in terms of the coronavirus impact. And then Callaway, be interesting to see, kind of what they're doing, especially as we take a look at some fitness stocks this week, and also, we looked at some last week. So next week, some interesting earnings coming up. Um, any last remarks, Steve, before we head out?
No, I mean, I think, some pretty solid earnings this week from some companies, some not so much on others. Pretty typical of earnings season. I think next week's gonna have some pretty interesting earnings in store as well. So I'm excited to see what we're able to talk about.
Yeah. All right, Steve. Well, it was nice going over this week's earnings, and I look forward to talking about next week's earnings with you. Um, if you guys have any comments or want to share your guys' opinions on this week's earnings or anything you guys want us to touch on next week's earnings, go ahead and leave that in the comments section below.